Welcome to the Cherry Bekaert Tax Beat, a conversation about tax that matters.
Welcome to this edition of the Cherry Bekaert Tax Beat podcast. Today's episode is an overview of tax rules for not-for-profit organizations aimed at being a primer for board members, particularly new board members. And joining our discussion today is Amanda Adams, our Manager Director and Leader of Tax Services for Not-for-Profit Organizations. Say hello, Amanda.
Hello, everyone.
And where are you calling in from today, Amanda?
I'm calling in from Atlanta, Georgia.
All right. How's the weather in Atlanta today, Amanda?
It's starting to begin to let the sun out. It's been rainy the last few days and we're getting warmer, so spring may be on its way.
All righty. I like that. Also, as always, joining is Sarah McGregor from Greenville. Say hello, Sarah.
Hello, this is Sarah. I'm calling in from Greenville, South Carolina, where we too are getting all that rain that Atlanta didn't use up. And but we're past the March 15 deadline, so things are looking bright and cheerful. We've got one more big deadline to go and lots of work to get accomplished. But this is great because we get to talk to lots of our individual clients. And then, Amanda, your next deadline was really May 15th, the month after that.
That's correct.
All righty, and I'm Brooks Nelson, partner, and today I'm actually sitting up in Washington, D.C. in our offices up here, and the weather is likewise doing very nice, doing nicely today. Sun trying to peep out, a little cooler, but it definitely feels like spring's in the air. Okay, so let's head on into our topic of discussion for the day. So, I mean, more or less our premises, you've now been asked to join a not-for-profit board. Part of your responsibilities includes some sort of financial oversight, and as part of that financial oversight, there is the filing of tax returns, or maybe not. There are the tax issues, regardless of whether you have to file tax returns or not. There are tax issues you should be aware of. So we're going to chat it up with Amanda here today and kind of just do a little bit of ABC. So Amanda, walk us through the Form 990 and its derivatives and how the IRS views these forms.
Sure. So the Form 990 is required for most exempt organizations, churches, and certain organizations affiliated with churches and certain governmental entities are not required to file Form 990. There are also 3 different versions of the Form 990 depending on the activity of the organization. So the smallest organizations that normally have less than $50,000 of gross receipts can file a 990N. Organizations with gross receipts more than $50,000 but less than $200,000, also having assets less than $500,000, can file a 990EZ, and then all other organizations must file a Form 990, which has a lot more information than the smaller versions of the 990.
So this IRS Form 990 serves more than just reporting information to the IRS on the activities of the organization during the year.
Sure. So the Form 990 is available for public inspection. So it's on the IRS's website. It's on other websites like GuideStar. And so that publicly available form is used by potential donors to an organization, journalists, anyone who wants to know a little bit more about the activities of the organization. Because there's so much non-financial information in it, it's just a treasure trove for people that want to know how much they may be paying their top executives, for example. That's a common thing that people like to look for on the return to get more information about.
So wait a minute, let's just be clear on that. I mean, if you're the executive director for a not-for-profit, your compensation is going to be put out there on some website for anybody and everybody to look at.
That's correct. So the organization is required to report the compensation information for its top management official and top financial official. So also highest compensated employees, those receiving more than $100,000 are also required to be listed.
But what if I really don't want my comp for the world to see? I mean, is there no way out of this?
Unfortunately not. The 990, when it was expanded in 2008, enhanced a lot of the transparency around compensation by requiring information about management companies and transactions with companies that might be owned by officers. So they've pretty much figured out the loopholes and how people could get around reporting compensation, and they've addressed that in the form.
So you can't even have 5 different small organizations paying one executive director in order to try to get the pay down, looking smaller. They want to know pull all of this information together if these entities are related together.
Yes, exactly.
Right. Well, so tell us what else is in the Form 990. If I was picking one up, what should I look for? What's in there?
Sure. So the 990 has the basic things you might expect as far as revenue, expenses, balance sheet information, but it also has information about the program accomplishments during the year, whether the organization had certain policies and procedures in place during the year, such as a conflict of interest policy, for example. The compensation information we discussed before, the board members that served during the year. Also, depending on activity, the organization may provide information about its major donors during the year, its lobbying and political activities, its grant-making activities, and any related organizations it might have.
So really, the IRS was when it expanded the form back in 2008, they were looking for more transparency, but also trying to push some best practices or some good governance approaches across organizations.
Yes, so the governance section, the policies and procedures that are asked about on the form are not technically required by the tax code, but they are generally considered by the IRS as well as others looking at nonprofit organizations to be best practices. So providing a copy of the 990 to the governing body, having a conflict of interest policy that's regularly monitored, having a well-defined compensation determination process for the top officials. All of those things are seen as signs that the organization likely has the practices in place to ensure that its assets are used for exempt purposes.
So, you just brought up a point about having the government body review the Form 990 and, having sat on some boards and having assumed, the cap as the designated CPA on the board has to be responsible for the tax return. This is a issue that comes up a lot. There's this little question on the 990 that says, have all the board members seen the 990? So can you just delve into that, since it's really on point on this discussion? Do the board members have to review the Form 990? Who has to, if not, who has to review the Form 90?
So the question actually asks, and this is a common area of confusion, it asks whether the board members received a copy of the 990 prior to filing with the IRS, and then it asks you to describe the review process of the 990 in Schedule O. So the board members do not actually have to review the return before it is filed, and the review process typically depends on the size of the organization. Smaller organizations will likely have, a treasurer review the return, maybe the board if it's a small enough board. But most mid-sized to larger organizations, the board will delegate the review process to the audit or finance committee. And so it's really important to have the review process conducted prior to filing the return, and to fully describe it, and of course to provide a copy to the board. Now, a couple of things come up in this area. One is I've worked with a few organizations over the years that believed the treasurer was reviewing, signing, filing the returns when in fact returns were not being filed. They did not get a copy of the return. Just as a reminder, failure to file the return for 3 consecutive years results in automatic revocation of exempt status. So you'll want to make sure that you see the return and that it is being filed on a timely basis. The second thing is that some organizations do not give a complete copy of the 990 to their board because they're sensitive around the information about donors in Schedule B. And so in that case, they have to literally answer no, they did not provide a full copy, even if they provided a public inspection version that does not have the names and addresses of donors in it. So again, that if that is the process adopted by the organization, it's important to disclose in Schedule O that the board did get a copy of the redacted version, and there was a reason why it was redacted. And that's why the question was answered no.
Well, clearly I was confused as well. So thank you for shedding more sunshine on that topic for me today. And I want to go back to opening comment you made also just at this point in time. Religious organizations frequently are not required to file a 990. So just to make sure that that is balanced here on this discussion. But let's assume you do file a Form 990 and the board members have been sent a copy of the return, or a board member serving on the finance committee, however it's your organization has delegated this responsibility. What should I, Mr. Commoner, I'm not Amanda Adams, I'm not a not-for-profit tax expert. What is reasonable for me to be looking for? When I'm flipping through this?
So from my perspective, I think Part 3, the Statement of Program Service Accomplishments, is probably the most critical area for the board to look at. The board members should be familiar with the organization's mission and activities, and should familiarize themselves with how the organization is describing those activities on the return. That's important not only from the IRS perspective to make sure that their activities are consistent with exempt purposes, but also looking at the 990 as sort of a public relations tool. Are you putting your best foot forward in terms of presenting your accomplishments to existing or potential donors? Are you highlighting those areas that you're really excelling in, to attract support to the organization? Part 5 asks a lot of questions about other filings and requirements that the organization is subject to. So that's good, just to make sure the organization is, filing its 1099s for contractors and W-2s for employees, and complying with certain disclosure requirements. Part 6 is the governance section we talked about earlier. And so again, looking at whether they are answering positively to those recommended best practices, and looking at the corresponding descriptions in Schedule O is important. Making sure that those descriptions, for example, how the conflict of interest policy is monitored, is that consistent with your experience as a board member? Any enhancements that might be possible there. And then the Part 7 and Schedule J both report compensation information. So I think it's always a good idea to be aware of what the top officials are being compensated, what types of benefits are being provided. Again, we wouldn't want to be caught off guard by somebody that has looked at the 990, may mention something to you. And so you'd want to just be aware of what's out there in the public sphere about the compensation practices. And then, there are a few schedules that are really particular depending on the organization's activities. But if the organization is operating a hospital facility, Schedule H is a really key schedule there, because the hospitals have very specific things that they have to comply with. And so that's all outlined in that schedule. So for those types of organizations, that would be a really important schedule to look at.
And so you work with a lot of colleges, universities, education institutions, and they're supporting foundations and organizations. Is it important that they operate together and consider how they're answering across organizations, or do you think each organization ought to stand on its own?
That's a good question. So we do try to coordinate, because there is a lot of information shown that you would expect to match up. So for example, in the compensation section, you're looking at compensation paid not only by the filing organization, but also a related organization. So a lot of times what we see is that the university will be, the employer will pay all of the salaries. And so when we're preparing returns for the related foundations, we're getting the compensation data from the university. And so just making sure that, like, if we're working with different people on the different foundation returns, that, there is comparability in the compensation. Another area is in Schedule R that shows the related organizations. You also have to check off boxes for all of the transactions that happened between the organizations. So again, making sure that there's consistency and comparability in that area as well.
Right. And I think you had mentioned in the past that there are some organizations that pull data from all these public information copies of Forms 990 and provide some benchmarking or that organizations can use to see how they measure up.
Yes, so there are organizations like Charity Navigator that their whole reason for being is to evaluate that data and rate charities so that donors can take a look at their analysis and use it to decide who they may want to donate to based on certain metrics. And so one of the things they look at, for example, is the functional expenses and making sure that there is a high enough ratio of direct program expenses to total expenses.
Oh, that's great. So we talked about all the good things that organizations do. What about red flags or warning signs that board members should keep an eye out for?
So it's always important to understand the exemption of the organization. So the typical type of exempt organization you think of is a charity, 501c3, but there are other types of exempt organizations that you might be a board member of, like a 501c6 organization, a business league, for example, like the AICPA. They have different rules in which they need to operate. So first, understanding the limitations of the exempt status. Then there are bits of information in the return that measure compliance with those types of limitations. So for example, a 501c3 organization cannot conduct any political campaign activity and a very limited amount of lobbying activity. Schedule C of the return reports information about both of those. So if you know your organization is limited, that would be, and you are completing that schedule saying that you had some activity, that would be an important area to look. So for a 501c3 organization, disclosing any political campaign activity would be a significant red flag. A possible red flag would be the completion of Schedule L, which reports transactions between the organization and interested parties. And so interested parties would generally include a current officer, director, trustee, certain entities that they own, family members of those individuals. And so while it may be a positive transaction in that maybe a board member's company has provided goods or services at a reduced rate, but it may not be, it may be excessive compensation to a board member's child or something like that. So just looking at Schedule L in the context of what's being disclosed, what are the conflict of interest procedures of the organization? Does this raise any concerns?
Things to stay out of the news cycle with bad news and just the good news of what good things your organization is doing.
Exactly.
So the last area it's really not on the Form 990 itself, but what about the other areas? I mean, organizations do engage in some for-profit activities, even though they're referred to as not-for-profit or tax exempt. They do have some for-profit activities going on sometimes.
So a 501c3 organization is required to operate exclusively for its exempt purposes, but exclusive does not mean 100%. So there is the existence of the tax on unrelated business income, which means it must be possible to engage in some unrelated activity and still be exempt. It's not a precise amount, but an organization cannot have a substantial non-exempt purpose. So a lot of times we will see unrelated business income coming through passive investments that the organization holds. Unrelated business income can come from debt-financed property. So they may not actually be carrying on an active trade or business, but still have unrelated business income to report. And you should be able to tell from the 990 if the organization does have revenue from unrelated activities. That should be broken out in the statement of revenue. And then there's also a question that asks if the gross unrelated business income during the year was more than $1,000, and if so, was Form 990T filed.
So there may not be a tax due on this unrelated income, but it does provide additional revenues, hopefully, for the organization to carry out its purposes.
Yes, so we see, I guess we've seen as organizations have tried to diversify their funding sources due to, constraints on contribution revenue in some years, the sort of expansion of different activities that may generate unrelated income. Organizations, of course, are able to deduct any directly connected expenses and appropriately allocated overhead expenses. So in many cases, we see that it's really net losses from unrelated activities. Really, it's just a way to get some additional cash flow, perhaps to cover fixed costs and things like that. But again, just sort of looking at the purposes and the scope of the activity as compared with the organization's exempt activities would be important to keep that in mind. But it's not necessarily you don't have to take a position that the organization should never engage in an unrelated activity or have any unrelated income.
Yeah, but still, I would say if you're sitting there on the board, if it seems like the board's driving somewhere where you're not trying to further your exempt purpose, you need to step back and at least ask some questions. You're sitting there in the boardroom, how we consider the implications if we're trying to do something that's significant, that doesn't, that's not dead on the mission. So it's dead on with the mission, I guess I should say, right?
Yes, because a lot of times I feel like people that are kind of focused on, getting that additional revenue, but not necessarily thinking through, even if it doesn't jeopardize the exempt status of the organization, but what are the additional costs, the administration having to file this form, taxes.
The distraction of focusing your people on two different directions. Mm-hmm.
Exactly.
All righty. So Amanda, here's the I guess the overarching question, for the expert. What are the key tax issues facing not-for-profits right now? What are the hot issues? What are the issues of the day?
So I'm sure most of you are familiar that the IRS is in a very dire emergency. It does not have sufficient staffing to process returns. Something I looked at today said right now they're at 23.5 million returns and correspondence items that they have not addressed. They're trying to hire people, but they've been working with, I think, some third parties, people that are not in the area of their normal expertise. And so what that means for exempt organizations is there's an increase not only in the wait time of getting things processed, but the likelihood that when it is processed, it will be processed incorrectly. Because I've had a number of instances where the result was completely wrong, not in accordance with tax law. That's fine for me because, number one, I know what should be happening and I can work to get that resolved. But for smaller organizations, people that may not be as familiar with the rules, I fear that they may not realize that the IRS has not done the right thing in their case. And so it's just been taking a lot of effort to try to deal with the IRS in this process where everything's delayed. And so that, covers all types of things, whether it's, something 990 related or trying to get their employee retention credit money refunded to them. Anything could be causing this issue.
Right. Yeah, we did a podcast not that long ago, and I'll just say our firm's director of IRS controversy is just always having good things to say about the responsiveness of the IRS these days. But anyway, we'll leave it at that.
She does not say good things about them.
All right.
So
All right.
Some other areas would be just a reminder that the incentives for charitable giving for 2020 and 2021 have expired, and just how that might affect contribution revenue for organizations, just taking that into account. And also, sometimes we take for granted the certain exemptions that organizations have, like from property taxes. And just, I've been hearing that it's possible that states looking for additional revenue could change rules around property tax exemptions. So if that's, something significant that the organization relies on, could just be important to have that in the back of your mind.
So I just have to highlight something you semi-referenced there, which is, the employer retention credits. I'm sorry, employee retention credit. So it's if your organization was negatively impacted by COVID or had decreased revenues, it's still a really good time to go out and take another look and make sure you can't qualify for this very lucrative benefit. So thank you for that lead in, Amanda. All right. Any other final comments from you, Amanda?
Just to remember that, as a board member, you have a fiduciary responsibility to the organization. For an exempt organization, the most critical thing of course is maintaining that exempt status. So again, just reiterating that something as simple as not filing, the annual Form 990 could jeopardize that exempt status. So just have it on your radar to make sure that, you get your copy of the return and you take a look at it, see if there are any red flags, and make sure it's being filed.
How about you, Sarah? Any last comments?
I was going to say the Form 990 is a very readable form. It's designed to be read and looked at by the public. So it's not inaccessible at all, and nothing to be too concerned about. But it does have a wealth of good information about the organization that may not be in any other format, the financial statements or otherwise, other reports, and even on the website.
Okay, and I think I will make my final comments. I guess I have a couple, but first is, and again, echoing something you said earlier, Amanda, use this 990 as a chance to promote your organization. Don't, this is a wonderful opportunity to look at the language and the descriptions of your programs and all that. Don't do mere lip service and put the least amount you can put in there. I think you can put some thought to show off your charity if you're if raising money is in part of your intent, I guess I should say. So I think that's a really good point. This other one is, daggone it, this should be easy, but as we sit here and talk about all these issues, it's a lot of complexity for an area that's supposed to be exempt from income tax. So I would just encourage people to, reach out to their professionals. And, clearly we're a big fan of Amanda Adams at Cherry Bekaert. I'll say that one more time, but to discuss these issues, if there are significant issues and any of these any of these red flags or any of these other side issues we've been talking about are jumping out at you. So better to address them head on, I would say. All righty. I think that's it. So with that, we will wind down this podcast. on the key tax issues of not-for-profit organizations. Thank you for listening in. Quick disclaimer that we are not providing tax advice on this podcast. Please consult with your tax advisor, hopefully at Cherry Bekaert, hopefully Amanda Adams at Cherry Bekaert if it's about not-for-profit, with your specific tax issues or to discuss information from today's podcast. Check out the firm's website at cbh.com for the latest guidance and materials on tax-exempt organizations and other tax and business topics. All right, this concludes today's podcast. Please like, share, and subscribe. Thank you, Amanda. Thank you, Sarah. Thank you, our listeners, for spending your time with us. We truly appreciate it. Let's call it a day and go forth in peace.